Hey everyone, Les here from BG Trading. Hope you're well. Today is 12th of August 2021 and I'll be analyzing the world's fourth largest iron ore producer, Fortescue Metal, which the SX code is FMG. Is this the end of the road for the share price rally, or is still more to come? Let's have a look. Just want to remind you, this is not a financial advice. It's just us from BG Trading sharing with you how we apply strategies, BG Trading, BGS20, to know when to buy and when to sell stocks, how we use the indicators, how we analyze macroeconomics, and how we put all together to make effective entries and consistent 20 to 30% trades with profits. Now, if you like the way we trade, please subscribe our channel and share this video with someone that you believe will be adding value to. We also have a free Facebook group, Buy Growth Sell Strategy for Share Traders, which I'm going to be putting the link at the description below. Take a look in this group. There are a lot of free content, free analysis for you. Just make sure you answer all the questions, so otherwise we're going to be rejected by the team. Now, I've been researching about our next entries together with my colleagues here, and one of the things we're looking at is this decline in share price for Fortescue Metal. If you see this, the share price has came down about, so this is over here. 1 second, let's put it Fortescue Metal. The share price has come down about 15% from all-time high. Now, obviously, that's to do with the great results that is expected to come from those mine companies, as they, especially Fortescue, has exceeded its guidance producing and shipping iron ore, as you can see in the last quarter results. Now, what concerns me really, and that's what we need to look at when you're trading or investing in a company like Fortescue, is what's happening with the iron ore price. Search a couple of articles that talks about what's happening with iron ore. So I'm going to just quick go through those articles with you. This is from news.com.au, and I also was reading article directly from mining.com website. So they're all reputable sources of, but at the end of the day, is media. But it's interesting to understand what's happening now in this article. What happening is that it says that China will likely succeed in crashing Australia's iron ore price. So, according to this article, there is a genuine interest in China is slashing iron ore price because it was obviously too high, and they're the world's biggest importer of iron ore from Australia and from Brazil as well, obviously. Now, what it says is you could be mistaken for thinking that it is a good time to buy iron ore. And when we talk about iron ore, we're also talking about stocks related to iron ore, like Fortescue Metal, Rio Tinto, BHP, Vale, all these companies. After all, Australian magic dust has gone down a quarter in price in the past month. The question is, it is a good idea buying at a low price and selling at a high price. So now that all those companies has reached all-time high, the question is, why we don't sell this and maybe just buy some other companies that are currently trading at the lower levels? This is my personal question for you. So I'm not going to tell you what happened. I'm not trading Fortescue Metal for months, but just a question for you to answer. Now, so Chinese demand decides that iron ore price. This is pretty much what it is. Everyone knows that the Chinese sort of commands iron ore price. And what's happening now, obviously, first thing is China and Australia is not very commercial friendly at the moment. We all know that. But what this says here is China has been tightening credit to the steel-intensive sector of the economy, property and infrastructure. That's where steel are mostly used in China. And if it's tightening credit, it just means that companies won't be able to borrow more, and therefore will slow down the economy. and the usage of iron ore as well. All year they are slowing down. So much, in fact, this guy says that the household names like Evergrande, which is China's formerly largest property developer, are tottering in the verge of bankruptcy. Interesting here. It's implied here that the company is not able to keep developing just because the Chinese government has tightened up credit for the sector. Now, Chinese property infrastructure alone constitutes 70% of iron ore demand in China and half of the global seaborne demand. Look, it is, and then now they're slowing down to control the iron ore price. Controlling the iron ore price, which means that they're going to eventually down track pay a lot cheaper for iron ore. And that means that there was a big miners like Fortescue Metal. They're just going to have to shrink its profits, its production, and therefore it potentially will affect negatively on the share price. Chinese authorities have demanded unprecedented levels of output cut from their spring wheel steel mills. So that this has lifted the price of steel as supplies fall, but they obviously need less iron ore as well. So that's a problem now with iron ore. Now the other problem is, and it says here as well in the same article, and I think this says everything, so it's very interesting. So raising iron ore supplies as well. This could be potentially the second reason. Sadly for Australia, this demand crunch is coinciding with the second reason for collapsing underlying conditions for iron ore prices. Rising of supply of the two largest iron ore producers, Vale, which is the Brazilian company, and Rio Tinto, confirming the production guidance for the second half of this year. And now the third fact is that Delta strain is triggering a further lockdown in China. So this is another fact that could definitely slow down the iron ore demand for a little while. When I say for a little while, I mean for the short to medium term, depending on how the government sort of wants to control the iron price. But this guy says thus all the delta, all the facts that we read before, besides add to a delta shock in the iron price, best hope of staving off a crash to $100 by Christmas. They say, implying that iron ore could be $100 by Christmas. If that's so, imagine what could happen with FMG share price, BHP and Rio. Could crash, right? Well, not sure, but the thing is, there's a lot of uncertainty out there, and as Warren Buffett says, you have to be fearful when everyone is excited, and then be excited when everyone is fearful. So the third fact is regarding COVID-19 Delta strain, spreading lockdowns all across China, and therefore triggering slowdown, which is already underway. So these three facts it is actually potentially affecting the iron ore price. It could be putting further pressure in the foreseen future. And even this guy says that because all these reasons, it could be iron ore price could be $100 by Christmas. If that's so, imagine what's happening with the share price for Fortescue, Rio Tinto, and BHP. It's definitely going to be affected negatively. Now, so if you believe it's going to be $100 by Christmas, if you believe in what this guy says, then I strongly suggest you to take a look at your position, and I will be miles away from those stocks for now. Now, the other article that I saw here is from mining.com, and a bit that I was interested of is that China has asked a mill to limit this year's output for no more than 2020 volume. But this is the thing. After the first half, production grew nearly 12%. So obviously it's going to decrease for what was last year because we have this growth in the first half year production. Under the current strict implementation of steel production control, iron ore price is not seen to be supported. So says Hyundai Hutai feature added, which is the guy who wrote this article. Now let's have a look what's happening with this stock now, guys. So it's trading. If you ever invested after COVID crash, which was here, 31% down from the time from $12 all times high at the time last year. So you'd have made about 260% if you have sold at the top. Now, if you haven't sold at the top, you'll be able to lock in 166%, which is pretty damn good profit for a company like this. Remember that Fortescue is the highest risk of those four biggest iron ore producer for the fact Fortescue holds a massive debt as well. You're just gonna be mindful on that as well. But it gives us the best swing on the share price. That's the way to trade, you know. But now what I want to see here, let's forget everything we read before and just look at the chart formation itself. It's obviously in ascendant, very stiff ascendant position now, and when that happens, you have multiple, what you call multiple higher highs and higher lows, and that's what happened here. We have a low here, and then we have another higher low here, and then higher low here, and so on. So multiple higher lows and higher highs as well, until we actually find this sort of a resistance around 2650. So what happening here, look, the question is it time to buy now? So if you're using our indicators, BGS 20 strategy indicators, we would say that the candles are losing momentum to the downside. However, what we have here is a bearish intersection level 1, which is this, the yellow line crossing the red line. So this is a massive red flag, big red flag, because we have no more support here. I mean, support according to our strategies actually found the support here. And what happened here is you got to be mindful every time you're going to, let's say for instance, you're going to trade this, you're going to enter into a position in this stock now. You need to make sure you have stop loss, and the stop loss has to be placed at all times. It is a must. So obviously stop loss would be for me if buying now. I'm not saying that we should buy now. I'm not going to recommend anything, but I'm just going to say what we're going to do now if you're entering now here. We'll put a stop loss under $20 here. Definitely under $20. Allow 15% retracement. But saying that, look, I also add a third simple moving average, 250 days, because I really want to get the feel of what could be potentially the bottom of this trend and still keep the stock going up in an uptrend. So the potential out now, using the 250 moving average, I would say that we have the share price have meet this moving average only at the COVID crash. Okay, only at the COVID crash. Okay, now what could have is a potential commodity crash here. If it goes down to $100 a ton, so we're talking about from $200 to $100 a ton, 50% crash on the commodity. Is that likely to happen? It could happen. It could happen. Not saying that's going to happen, but it definitely could happen. And it all comes down to how China will sort of manipulate this whole situation. But saying that, I wouldn't buy this stock now. I would probably collect profit at these sort of levels and consider buying only if we have sort of a steady bottom at the iron ore price, and potentially buying if the stock reaches this 250 days average, which will be haven't been reached for more than a year. And I believe this is a critical point that could be giving traders and investors a good entry point again. But then watching what's happening with iron ore price as well. Now, if you're buying now, and then you most likely will see the stock going to the all times high again. You only make, if that happens, you only make 15%. So it's still not enough swing to apply BG trading strategy effectively. So what we want to do is, ideally, we want to have the stock trading around this 250-day moving average, and then we have what we call 20% swing on the share price, potential swing on the share price that could give us an effective trade on FMG. Look, this is my view on FMG. Hope you guys enjoyed the video. At the moment, to summarize, I would not touch on Fortescue at all. Wouldn't be buying now. I would just take my money and take into another sector. This is my view on Fortescue. Hope you guys enjoyed. Have a fantastic day, and I'll see you in the next. The whole idea when we designed BG Trading BGS20 strategy was to use only a set number of indicators to make it simple and clear to understand and to be able to apply our KPIs very easily and very effectively. So you don't have to be any Wall Street smart person to be able to apply those strategies. We really hope this course will help you to make better decisions and make successful trades. See you in the course.